So you moved out of California, you changed your address, maybe even you switched banks. So you think you're off the radar, right? Wrong. California's Franchise Tax Board have one of the most sophisticated data systems in the world. They know where you work, they know where your money moves, and they know if you've ever earned a dollar tied to California. They can and they will find you. Stick around, because in this video I'm going to show you exactly how California tracks down out-of-state taxpayers and their assets, and how to protect yourself before a civil collection issue turns into a criminal one. Here's the part most people never realize. The IRS and California, they share tons of data automatically. Every year, the IRS shares huge files containing W-2s, 1099s, partnership K-1s, all of your filing information with California. It shows them California source income. It shows them California addresses. Even if you moved years ago, one stray document can trigger an investigation. California systems flag you when you earn income tied to California. So a company pays you using California withholding. A California-based business lists you as an out-of-state owner or issues you a K-1. Once that happens, FTB starts to build a case. They link your federal records to your old address in California. They trace your business filings and your bank account. Let's break down the 5 ways California finds non-filers and out-of-state taxpayers. Federal and state data exchanges. Again, the IRS legally shares your return data with the Franchise Tax Board. That's the foundation of their underreporter non-filer programs. Non-resident withholding reports. If you earned California income while living elsewhere, say you did consulting, film work, or own California real estate, the very payers that pay you are required to send California your information on Form 592. This means the state knows exactly where you live and exactly how much California source income you earned. Bank and asset discovery information. Banks doing business in California must match their customer accounts against the FTB's delinquent taxpayer list. If there's a hit, the FTB can legally serve an order to withhold, even if your account is based in another state. Refund and payment intercepts. Owe California money? Your federal tax refund or even your Social Security payments can be intercepted through the Treasury offset program. Skip tracing and legal levies. The FTB hires dedicated collectors who track you through property filings, licensing databases, employment records. Then they'll use levies, liens, and wage garnishments to collect. In other words, moving out of California does not make you invisible to California. The "I don't live here anymore" excuse doesn't work. Here's a scenario I see all the time. Someone leaves California, sets up shop in another state, and assumes that because they don't live in California anymore, they don't owe California anything anymore. But California doesn't tax where you sleep. It taxes where you earn. If your income came from California services, rentals, partnerships, it's still taxable here. And once the FTB matches your data, it's only a matter of time before the letters start to flow in. First, a request for tax return, then a notice of proposed assessment, and finally a lien, levy, or intercept, often years later when penalties and interests have gone through the roof. By then, what started as a small oversight can become a 6-figure problem. I deal with it every day. These civil issues can turn into criminal issues. Concealment, like hiding accounts, using nominee businesses or identities to hide income, setting up fake out-of-state entities, can tip your case from a civil issue to a criminal issue. That's where it gets dangerous. The FTB and the IRS, for that matter, flag badges of fraud. Once a civil auditor spots them, or a collection officer, your file can move into the criminal territory. If all of a sudden they cut off all communication with you, that's a good sign that's happening. At that point, silence is golden, and only an attorney can invoke your constitutional rights against self-incrimination. What to do if California contacts you? If you receive a notice, levy, or Form 92B tied to California source income that you didn't report, here's what to do immediately. Do not ignore it. The longer you wait, the more automated systems kick in. Do not call your old CPA. Anything you tell them is not privileged and can be subpoenaed. Do call someone like me, a dual licensed tax attorney CPA. This will preserve your attorney-client privilege and keeps your communications protected while we fix the issue. At our firm, we build a defensible resident sourcing file. We separate California income from everything else. We correct underreporting, and we negotiate voluntary disclosures if you get to us before the government does. Privilege is everything. When a tax problem crosses into potential fraud territory, privilege can make or break your case. Our team operates under attorney-client privilege and work product privilege. This is extended to our CPAs because they work for a law firm. We don't even need a co-bill arrangement. That means your financial data can be analyzed safely without exposing you to further liability. It's how we've kept countless clients out of criminal tax investigations, even when they were already on California's radar. So, California has the ability to locate out-of-state taxpayers. That ability is stronger than ever. They don't need detectives, they have data. But you still have rights, and you can act before it's too late. If you've ever received an FTB notice, a levy, or an intercept, or you suspect California has matched your bank or employment records, don't go silent. Call the tax law offices of David W. Klasing today at 800-681-1295 or visit KlasingAssociates.com. The schedule program is attached to our Contact Us page. Arrange for a reduced rate initial consultation. We'll help resolve your exposure, protect your assets, and most importantly, keep your matters with California purely civil. Remember, California already knows how to find you. The question is, when they find you, will you be unprotected?